Oh, good evening. Jumping on to do a quick live to keep my commitment to do weekly updates. Joanne here, talking about investing in dividend stocks in your tax free savings account using the dividend snowball approach. So today I'm going to keep this video brief. It's a short update on my progress since starting to invest this year. In summary, my son actually took action quicker than I because I was hoping for a sale after the elections, but Trump won and the stocks rallied, so there was no sale. So anyway, my middle son Ben, he had started to invest in July, but I actually only started buying stocks in November because I didn't want to keep on sitting on the sidelines. So as a recap, there are actually four stocks that we're holding right now. I have five stocks that I am tracking and getting to know better. And my son, Benjamin, has two stocks that he's focused on. Um, and I've given him access to my same trading account so that any gains that would accrue would accrue under the tax free savings account tax free. So year to date, we just started and we've invested over $3,000. A thousand was invested by my son Benjamin, and actually he invested some more today because he was seeing the prices were so good. So really, about 2,000 of that was actively put into the market by him, and about a thousand by myself. He's been invested in the Amazon yield stock called YAMS, which appears to give pay dividends out on a monthly basis. It's the highest dividend earner for us to date, and he's also a big fan of TD. Myself, I have so far only invested in three of the five stocks that I have been tracking, and that's Canadian Utilities, Fortis, and also TD. Most of my investments I made in November, so the value of my investments are close to what I bought. Some with a little bit of a decline, so we'll need some more time to see if we get any short-term appreciation in price, but really looking for the dividend income. So when I look at the YAMS and the TD stocks that were held since July of this year, since Benjamin started in July, we've earned a total of $23 of dividend income, and that's on the initial investment of just under a thousand. When I look at the actual return to date on our investments that have been in for more than a couple of months, we are actually double digits. As you know, TD had a little bit of bad news happen there with, I think, mortgage fraud and just loose controls around mortgage lending. And so their stock had dipped temporarily, and my son bought on the dip, and the stock has since recovered, and that's really been part of the gain that we got there. And then his other stock, Yams, which is not only paying dividends on a monthly basis, but has also appreciated in value. And so the return to date on the Yams stock is actually over 20%. Now, that's not what we expect in the long term, but it's always encouraging when you see positive returns in the short term to keep you going at the very beginning. So there's my update. I am going to give another update maybe a year from today. We're we're putting in money at least monthly myself on each paycheck, and I'm looking forward to see how this investment grows. And the thing that I really like is with the dividend snowball technique, you're getting dividends and then you're using those dividends to buy more shares to get more dividends. And so that's how the snowball technique works. And even with our small amount of capital, which was just under a thousand to start, we're already seeing We're already seeing that move. So I'm excited. So anyway, that's my video for today. I'd love to hear your thoughts or any questions, and I will see you next week.